Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. We're about middle of February in 2016. My, how time flies. When you get older, it just seems to go a whole lot faster. But you know something, I track real estate in Oklahoma City, obviously. That's my business. I primarily do investment real estate, and so market conditions are extremely important to me. And I want to be straight with people. I want to be honest with people. I want them, when they buy from me, because most of my clients are from outside of the Oklahoma City or Oklahoma area, a lot of Californians. I want them to know exactly what's going on. And so right now, I kind of want to tell you what the situation is in Oklahoma City. Now, you might have read somewhere that oil prices are just a bit down. In fact, instead of being $100 and $140 a barrel as they were at their high, or even 65 or 70, recently they've been below $30 a barrel. And I'll be honest with you, it hurts. Now, it's hurt in Oklahoma more in the rural areas where that's where the drilling goes on. That's where these guys that make $1,000 a day work are nomads in their RVs and go all over the country doing drilling. And it's really hurt the sales tax and the city governments of those small communities. That's been the biggest hit that we've had. Now, we have in Oklahoma City, we have some major oil concerns, some of the biggest independents in the world. And they've had some layoffs. But here's the interesting factor about Oklahoma City. We've maintained, I believe it's still at this point, the number 2 position for metro areas in the United States, over 1 million for the lowest unemployment, at about 3.3% versus Austin, which I believe right now is about 3.1%. Now, even though there's a net loss in the energy field, there is gains going everywhere else. And so jobs are plentiful here. And so it's really helped. Now, where it's hurt really is in the public sector, because if you're selling oil at $30 a barrel versus $65 a barrel, the revenues are a whole lot less. And the state governments have to balance their budget. It's a real problem there. It's something they solved last year. They're working on it right now. But it really does hurt services in that particular respect. But that's good. Now, from the point of view of real estate itself, it's still doing outstandingly well. Now, that being said, we did notice in November, December, and January an increase in inventory for the first time in about the last 2 to 3 years. That's been the situation in the United States right now, is low inventory has pushed the prices up. Now, our inventory is up about 10%. Our days on market have gone up just a little bit. And so right now, I think there's some psychological insecurity that's going on. Now, the absorption rate below 200,000 is still very much favoring the seller versus the buyer. But once you go to about the 250, say to 350 to $400,000 level, it's now kind of shifted in that price range more to a buyer's market. So pricing is really important. But the market is still going well. The median price sale is still going up. The unemployment is low. Naturally, we'd love oil prices to go up. Now, I really like saving that money at the pump, but at the same time, I know how important that industry is to Oklahoma, even though it's only about roughly 3 to 4% of our employment. Does bring in a lot of revenue, but the good news is that a lot of other sectors in the Oklahoma City economy are doing extremely well. And because of that reason, you can still buy with confidence, whether it's a rental property or a place to live. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.